Hey guys, it's Nick, and in this video I want to talk about what's going on with Alibaba. So I'm going to back up a little bit and talk about how all this stuff started with Jack Ma being out of favor with the Communist Party, what Alibaba consists of, their different business lines, and what's the latest with their buybacks and their monopoly investigation, and is it a good stock to potentially buy at some point? So let's check it out. Now, although the S&P futures are up right now at almost 3 o'clock in the morning, Sunday night, Monday morning, December 28th, Alibaba in Hong Kong is trading down about $10 lower from the New York close on the 24th. So right now it's trading at about $211. So you see a gap down, and it's just been trending lower the whole session in Hong Kong. So let's start with the beginning of why Jack Ma is kind of in the doghouse with the Communist Party. For those who don't know, China suspended the IPO just 48 hours before it was supposed to start trading in Shanghai and Hong Kong. That's the Ant Group IPO spinoff from Alibaba. And their reason for it is changes to the financial technology regulatory environment and other major issues. But what people say the real reason is remarks that Jack Ma gave on October 24th at a summit in Shanghai, where he directly criticized local regulators and the state-dominated banking sector, saying, "We shouldn't use the way to manage a train station to regulate an airport." Ma said, "We cannot regulate the future with yesterday's means." So basically that's a dig at Chinese banking regulations and regulators, saying that they can't use the old banking kind of rules for this new fintech kind of companies. So it seems he got a little too big for his britches, and the Communist Party is going to take him down a few pegs and make him an example to the other fintech companies in China as well. So most people know Alibaba as the Alibaba website, AliExpress, and Alipay, the payment system. But what the regulators seem to be worried about are his financial loan products of Ant Group. One of the products, Buyback, is kind of like a credit card. It's unsecured revolving credit product for daily purchases, and it functions a lot like a credit card, letting people borrow interest-free for up to 40 days, then charging interest on their outstanding balances. And since Ant is unregulated like traditional Chinese state-owned banks, the company's direct provisioning of credit has sparked concerns within Beijing that this is a critical part of China's credit infrastructure that the state has little control over. So basically what they're saying is Jack Ma is now has more power in expanding credit to Chinese citizens than the Chinese central bank, and they don't like that. So that's one of the products they don't like. And the other product is called Buyback, which means just borrow, and that provides unsecured installment loans. And so together, these two digital lending operations has been Ant's biggest growth engine in recent years, and it says they supplied credit to about 500 million Chinese consumers who have a total outstanding loan balance about $263 billion at the end of June. And what's pretty surprising is that Ant Group doesn't fund most of those loans itself. So it has been funded by small banks and trust companies that often lack sophisticated risk controls. And so Ant supplied just 2% of the outstanding loans it facilitated as of June, and another 10% was funded by the issuance of asset-backed securities. So the rest came from banks and trust companies that bore the risk of loans going bad. And so the Chinese government doesn't like all that risk that they're seeing, so they're trying to rein it in and also kind of take Jack Ma and any other fintech companies down a few notches, it seems. So this is a look at Ant Group's financial products, and the source is Ant Group, Goldman Sachs, and the data is compiled by Bloomberg. And so they have 173 billion in asset management, 290 billion in lending, 107 million people in their insurance products, and their online payments, Alipay, is 17 trillion. But of this 17 trillion, they say that it's pretty much a loss leader or a wash to get people to buy other products. So they make the money from the insurance, the lending, and the asset management. And Tencent, Alibaba, and Ant Group are also invested in a whole bunch of Chinese startups, anywhere from social media to electric vehicle companies to online commerce and all that stuff. So they have their hands in a lot of businesses that have the potential to also get really big in China. So they have a lot of power, and the Chinese government doesn't seem to like that very much. So as a result of this crackdown, Ant is already taking steps, and they're making a plan to do what the regulators are telling them they want to see from them. And one of the first steps they did is cut in some cases by half the credit limits of people who use the credit card type product, Yabe. Some people had their credit limits cut in half from like, I don't know, $300 down from like 458 or something along those lines. So these are not huge credit limits, but if you're doing it for millions of people, it does make a dent. And Ant said they did this to promote more rational spending habits, but this little peace offering was ignored by China because they have now launched an investigation into alleged monopoly practices at Alibaba. And on Sunday, People's Bank of China Deputy Pang Gongsheng said Ant must return to its origins in online payments and prohibit irregular competition, protect customers' privacy in operating its personal credit rating business, establish a financial holding company to manage its businesses and rectify any irregularities in its insurance, wealth management, and credit businesses, and run its asset-backed securities businesses in accordance with regulations. Bloomberg says it presents a serious threat to the growth of the most lucrative operations of Jack Ma's financial empire, but regulators stopped short of asking directly for a breakup of the company, but stressed it was important that Ant understand the necessity of overhauling its businesses, and told it to come up with a plan and a timetable as soon as possible. So if Ant had to give up all those other financial products, the loan products and the insurance and the wealth management, and was only left with the payment product, which handles 17 trillion of transactions in 1 year, it says the online payments have largely been loss-making. And here the head of China Financial Research at Jefferies says Ant's growth potential will be capped with the focus back onto its payment services. On the mainland, the online payments industry is saturated, and Ant's market share pretty much reached its limit. So the worst case scenario would be for Ant to forego its money management, credit, and insurance businesses, halting its operations in the units that serve 500 million people, and its wealth management business includes the Yabo platform that sells mutual funds and money market funds and accounted for 15% of the revenue. And the credit tech accounts for 39% of the total revenue in the first 6 months of the year, and it made loans to 500 million people. So that is huge. So with all that going on, they upped their buyback from, what was it, 6 billion before to now 10 billion, but that's going to be over like 2 years. And Alibaba has a market cap of like 600 billion. So that is just kind of a symbolic thing, drop in the bucket just to kind of bring back some confidence in the stock that has tanked, what, like 30% from its highs since all of this stuff started happening. So here's a chart of Alibaba going back about 5 years, but this is the most important part. There's a monthly chart here, and you just see in the last 2 months this thing has been clobbered, and potentially it could bounce off this $180 level. Who knows? But stock is definitely getting cheap, assuming that the Chinese government is not looking to break up or dismantle or just completely trash Alibaba, which I doubt they would do. So is Alibaba getting cheap enough to buy? Let's look at some stats here. Trailing 12 months PE is 31. Its peers, the average is like 72, and their growth is pretty high for a 31 PE. So earnings per share growth over the last 5 years is 37%, and their revenue growth in the last 5 years is 42%. So they are still growing pretty fast for that kind of low PE. So is Alibaba a good stock to buy now at these levels? It depends on what people think is going to happen to them. And here in this Bloomberg article, they made 3 different assumptions for mild, bad, and nightmare. For mild, the optimists say that regulators are just trying to reassert their right to oversee the financial sector without any huge drastic changes, and there's precedent for this. Tencent Holdings became a prominent target of a campaign to combat gaming addiction in 2018. Its shares took a hit, but now they're at all-time highs, and even Alibaba before did have a problem following accusations by authorities on everything from unfairly squeezing merchants to turning a blind eye to fakes on its e-commerce platform. So this has happened before, and I don't think the Chinese government wants to kill the golden goose that lays the eggs, so to speak. A bad outcome would be if regulators move to break up Ant Group, and that would complicate the shareholder structure and hurt the company's fastest growing businesses. And then here they say the nightmare scenario would be for Ant to forego its money management, credit, and insurance businesses and halting its operations in the units that serve 500 million people. So it depends on what you think is going to happen, the mild, the medium, or the nightmare mode. Personally, I think it's going to be more of the mild flavored smackdown and just letting all the fintech companies know who's boss, and I think business will go on as usual. And so in my opinion, I think Alibaba will probably be a good stock to buy pretty soon. I'm looking at maybe if it falls some more to 180 or so, something like that, I may dip my toes in. I don't own any of it yet, but I might soon. So do your own research and make your own decisions. I'm just pointing out what's going on in the stock and my thoughts on it. I hope you liked this video. If you did, give me a thumbs up and leave me a comment on what your thoughts are on if Alibaba is a buy now, or at what level you would think of getting into it. As always, guys, thanks for watching, and I'll see you in the next one.